Welcome to Health, Wealth, and Legacy. I'm your host, Sam Abdallah. Our goal is to bring leaders, thought leaders, education to inspire, empower, and motivate you to expand your mindset, grow, and live your best possible life in the areas of health, wealth, financial freedom, and legacy. All right, I'm here with Brooke Shang. Brooke Shang is a real estate investor as well as a mentor with Trust Your Talent Academy, which was founded by a group of investors and business owners who believe that anyone can create and enjoy financial freedom and success. Do I have that right, Brooke?
Yes, you got it.
Okay, awesome. So, Brooke,
Mhm.
tell us a little bit about yourself, people who don't know who you are, and how you got started into real estate investing and being a coach with Trust Your Talent.
My journey started seven years ago. Wow, seems like forever. So at the end of 2016, I started getting myself educated. So I don't know if I could call myself an investor before that, because we did have a rental property. That was our home, basically, our previous home. So we kind of just fell into it. So we were good. We pay our taxes, contribute to RSP, and saved really hard. However, we only saw growth and wealth through real estate. So we didn't own a lot, just from the previous property, the rental income, and the property now we're living in right now. So that's here.
Great.
Yeah.
Yeah. And you're building a house too. Congratulations on that, I believe, or so, correct? Yeah.
Yeah. And it's actually quite a journey because we're in this 1,200 square foot home for almost 10 years now. Oh my God, 10 years. So 10 years this year. And since we moved to the neighborhood, we kept thinking, okay, we're going to upgrade to a bigger home. And financially, that's one thing. I think mentally, even when we got this house, having the mortgage on this house actually scared us because at the time we considered this is a big mortgage. And now we're getting a mortgage like triple the size. And I don't think just financially building it up and saving the money would be sufficient because I think mentally we wouldn't be able to handle it either
Yeah, I'd
if
like to
we
dive
haven't
into what
gone
you
through it.
said too. You said something about saving hard. You guys had jobs, you're responsible, you do what you're supposed to do, right? All those things.
Mhm.
And you noticed that only way to really build wealth was in real estate. Tell me more about that, because that was really, I'd like to unpack that a little bit.
I actually didn't start working until about, 10 years ago too. And I stayed at home with my kids. So we were okay because my husband worked really hard, and at the
Mhm.
same time, we were frugal. I mean, we watched our expenses. I kept saying I'm a coupon specialist. That's probably why
Right.
I love financing right now. I'm not a math person. I just love the fact that money in the buy or you find cheaper debt servicing, that kind of thing. I think that kind of built in me since I was a mom and stay at home with the kids. And I think I can say that about my friends too. Even though we were stay at home moms, we still consciously know that, hey, we are supposed to save. And we even feel guilty sometimes if we're spending the money. At the same time, then how else do we do it? We didn't know. We were
Right.
okay.
Right.
Yeah, because on the surface, we live in the city. We have a great place to live, middle class and
Yeah.
cars, houses. Occasionally we travel abroad, so it seemed okay. At the same time, we really didn't save anything.
So
So
so you stayed at home, you were a stay-at-home mom, you were frugal, you lived a really frugal lifestyle, and you weren't able to really save until you got into what was that light bulb that went off in the head and said, okay, real estate is helping us save a lot better than it is with any other means.
because when we bought this house, we basically had to appraise where we previously lived and get some money out. Then we realized, oh my God, that's probably the only wealth we've accumulated. We had some RSP, not a lot. We did that because then we didn't have to pay a lot of tax. That really wasn't that much at all. So if we think about what we have saved up and the additional income from the previous house, I mean, single family homes don't cash flow. However,
Mhm.
we lived there for a while, so there was some equity. And basically that's the only place I saw some growth in our wealth, and not as an educated investor. So when I started to get educated at the time, We intentionally not to have high credit card limits, not to have a lot of debt. And I never had a car under my name. At the time I started real estate education, that's the time we had our mortgage for like a year or two, and I had a car under my name. So that was basically the only two debt we have. And now we're looking at, okay, if I want to spend more money, I even intentionally limit my credit card limits so we don't overspend. And that's when I started to realize, okay, it doesn't seem right. Actually, I think the light bulb for me was a little late, because
Okay.
during that 10 years I stayed at home, something should have clicked. You know what I mean?
Yeah.
Yeah.
So you're passionate about helping others with the journey of real estate. Like, why is it important to true financial education? Like, what does that look like to you? And what is allowing you to help people on that journey of building wealth in real estate, to learn from any mistakes
Mhm.
you may have made or just in general?
In general, I look at it as financial education. So not necessarily real
Right.
estate. We just happen to use real estate as a vehicle. So the same concept as you're leveraging, you can use that in different businesses too, right?
Right.
So passive income, things like I wrote a book, so not a lot at
Yes.
this point, everything is paid. So residual income, little, however, there is something. So same idea in real estate, you could leverage it elsewhere. And I think we mentioned mindset, right? So in the beginning, I think it's just a comfort level. You don't know what you don't know. Even when I started get educated, I only touched the surface of it. However, that kind of showed me there's a way. There's a light at the end of the tunnel if you follow the path. And I started late. So Sam, you're younger. A lot of people have younger kids. They started younger. I was already 40 at the time. So if I thought if I didn't start now, then how much longer do I want to wait?
So you mentioned that mindset piece. Like, what had to
Mm-hmm.
change in the mindset for you to really start intentionally building wealth using real estate as a vehicle? Because you mentioned it's a vehicle for
Mm-hmm.
education.
Yeah.
What's that mindset shift? What are some things you had to do, and you teach your students as well when it comes to that? I think.
Yeah, that's a big part. Now that you mentioned it, I think it's also surrounding with people who have done it. So when you don't see it, when you don't feel it, when you're not surrounded with people who show you the way. So I read the book Rich Dad when it first came out in the year 2000. I remember that because he was on Oprah and I was working in Taiwan at the time. I even did a book club and presented the book, and I never did anything about it. I just thought everything sounded right. However, I don't see the way. I just see it as somebody else doing it. So when I see other people doing it actually have some results, then I start to see how it could be a path for me too.
So the other people doing it creates a path, an action item for you to actually go out and make it happen. Is that right?
Yeah. Yeah. So same thing in mentoring as well. I see new investors, they're just people that started when I started. So we're just starting at different time. That is all. And sometimes most of them started earlier than me because people don't usually wait till you're middle aged or your kids are already in school full day before they had the thought, right?
Right.
Yeah.
So you started getting into shifting into helping others when it comes
Mhm.
to wealth building. What are some core values or teachings that really help those students start getting a hold of, being around in that environment, other people building wealth and learning and taking action? What are things that Trust Your Talent and you as well do to help
Mhm.
get those people off the fence to take action into starting to use real estate as a vehicle, maybe to build wealth?
Wow, I can answer it in so many different ways.
Yeah, go ahead. Love
Yeah.
to hear.
Just, yeah, even before we started the podcast, you talked about contribution. So every year at Trust Your Talent, we on the team, we evaluate what we're looking for that year. So just based on our core value. So basically fulfillment, so contribution for sure.
Mhm.
And then impact, sustainability, and health. For me, health is actually a big part this year. because I realize sometimes when you're helping people, you need to have your own health and joy, by the way. It's the last one.
Mm-hmm.
So every year a shift for me. And then a lot of the times people say, hey, I have to reach a certain goal before I have the extra energy to help other people.
Mm-hmm.
At the same time, I think if that's engraved in you, you will be able to do something. So Sam, like for our kids, right? If we want to make an impact in their lives, no matter we have the resources or not, energy or time, if it's important for us, we'll do it. We will for sure put in the time, the energy, etc. So for a period of time when I started, I thought it was impact. That was actually when I started getting into treasure talent. Because once you reach your financial goal, I think there is something more out there. Then you realize it's not just about money. Then you mentioned about contribution. Sometimes I think even as parents, we exhaust ourselves. Then I realized, okay, I have to have joy in order to make a great impact.
Yeah.
And then I start to focus on joy. Everybody is different. I think I'm really lucky in the sense that I've been really healthy. However, Sam, if something happens to you this year, health-wise, then perhaps that will be your focus. Because then you realize if I don't have that, everything else is not on the table anymore.
I love that. So really you analyze for the beginning of the year what your focus is on. That's kind of your lens. And then joy and impact. The impact's been big because you've impacted a lot of people through your events. I know that's been huge. Where has that shown up for you when it comes to your students and just getting people aware of changing the thought patterns about money, breaking that old cycle and belief? Because I'm really passionate about that. How do you get people into a new belief system about money and being surrounded by people who are able to look at money as good and
Yeah,
helping people build wealth for themselves and for future?
I think they have to really take a step back. So we mentioned really a lot of the time it's not about the money. So we kept getting into what are your goals?
Right.
And I know it sounds like cliche because everywhere you go, people ask you where your goals are. And even when we speak to the students, we always talk about it's about making an impact one person at a time. Financially, it's very important for people because they don't realize that if you have to still worry about survival, you're not gonna have
Yeah.
the extra energy and space for everything else. So if you realize you can control your finances, I think that's why a lot of people start here, even for myself. I realized, hey, I was frugal. I didn't have any income at all. So that's why I started doing this. I mentioned why is the mindset so important? Because if they just chase money, really, they're not gonna sustain the journey, right? We all know that.
Selling your home during tough times, whether you're downsizing, divorce, or debt, we understand the unique challenges you're facing. Introducing our specialized real estate solution to help you navigate these difficult times with ease. Selling a home can be overwhelming, and yet our experienced team will guide you through the process, providing personalized strategies to maximize your home's value. Whether you're downsizing, going through a divorce, facing debt, we'll help you sell your home and start anew. Don't let these challenges define your selling experience. Let us turn them into opportunities. Visit our website at affluenceregroup.com to learn more. So financial freedom is definitely, and you talked about your book. Can you share your book a little bit and some principles about the book that you think are really important too? Because I'd love to touch on that too.
Sure. Funny enough, when everybody approach me about real estate, it's usually about lease option or rent to own because they know that's what I focused on. However, when I started writing my book and I realized this is the same thing like we talked about. You're not going to get there until you have your foundation set up.
Yeah.
So I started by setting the foundation of what your mindset should be. And I wrote this book 3 years ago. So even now, I think I can add a little bit more just by looking at everybody else's journey and my own as well.
Yeah.
So actually, when I have the title of my book, that was 2019. Actually, I didn't reach financial freedom at the time. So when my coach for writing the books, they just put down a title. The title resonates with me. It's a cliche. At the same time,
Share the title, by the way. Can you share it? Because I'm going to have the link, but Just show it. I'd love to see it.
Yeah, so you can Financial Freedom, The Royal
The
Way.
Royal Way, that's it. Beautiful book.
The Royal Way. So you can just Google it on Amazon. And my coach actually said, then describe your lifestyle. Actually, I think I've always had a pretty good life. I actually traveled a lot. My family's in Taiwan, so I used to go back even 2-3 months at a time for family reasons, because of my dad's health and because my mom and my sister are still there.
Mhm.
So when I described my lifestyle, they were like, this is the royal way and this is the lifestyle people want. So when you just mentioned financial freedom, what do people usually tell you? I want to travel. I want to see my family.
Right.
Yeah.
So it unpacks the mindset behind it. What were those some things you would add in the book then that would be mindset related to that person who creates financial freedom and has impact for others? Like what were some things you'd add in the mindset piece?
So the goal is really a big part. And after I had a title, shortly after I reached financial freedom goal, like in no time. And it's funny because at that time I was in real estate already 3 years, right? And for people on my team or a lot of investors I've seen, they've already reached their financial freedom goal.
Okay.
For me, one thing is our expenses are a little high for my family. Like I mentioned, we travel and we're in Toronto. And my husband is working. So I think at first I didn't feel urgent enough to do that. I think it probably after putting the book title down, I'm like, okay, I've done enough. I have to get the mindset as well. And at the time, I put down 3 goals. And when I was writing chapter 1, chapter 2, then I said, if you're reading this part, at least one goal is done. That's finishing this book in 1 year. And then my other goal is our home. So we found the house in 2021, actually.
Congratulations. That's exciting. And you're building that. So you're moving into that forever home. You're getting it built right now.
Getting it built right now. Yeah, it's almost done. So funny enough, I think with the experience as an investor. So yes, my focus when I started was lease options, so rent to own. However, as a result of being in the community, I basically have done all the strategies. And then you have to not be emotional about renovating, about everything else.
Yep.
And I find myself struggling a little bit because it's like I'm used to the same thing. Like when I was looking for coupons, when I was a frugal mom, and now I'm like, okay, this is it. We're gonna splurge here and there, and we're gonna do a high-end build. Then I'm like, okay, I have to change the mindset a little bit, let myself enjoy the end result. So we're going to be in the house soon, within a month, basically.
That's exciting. What excites you most about that next step in the journey and how you've been able to create that for your family and support them with real estate?
I think so, Sam. At first, I thought, okay, it's the legacy. We're going to leave money for the kids so they don't have to worry. And that's been the mindset of generations and generations.
Right.
And then I realized probably not. Because I think we've provided them enough. And when I look back, I immigrated from Taiwan and I traveled a lot as a kid too. Really, there's no survival issue in Canada. When I lived downtown, I've seen people with no money on the street. However, most people are not like that. There's government housing. There's a lot of government support. At least nobody's starving. However, everybody's mindset is still in the survival mode. And I thought, okay, I don't want my kids to, it's hard. We say, okay, we want to give them the money, the legacy. However, they have to learn to maintain it. They have to continue the legacy. However, if they don't experience it, I mean, you've gone through jobs, 9 to 5s, and understanding passive income, understanding trading your time for money. If they don't go through that, I don't think they can build a muscle though to be financially free.
So going through the working aspect to build that muscle.
Yeah.
Okay.
Yeah.
You're going to say something too? I'd like to hear what you had to say. That was really good.
I think in North America, everybody I don't know if your family is the same, because in Asian family, it's without saying that parents will help their kids. And when the parents are older, the kids will support the parents if the parents don't have money.
Right.
Yeah. So it is actually a struggle for me to think that once they're in university, I mean, some kids don't even have the money for university. They get it into student debt. Not necessarily because the parents don't have money. That's just the culture here. That was, my son is getting into university. So that was kind of hard for me to accept. And now I kind of realize, hey, they do need that. They do need to train their muscles.
Train the muscles.
Yeah.
So what can someone do to train that muscle of understanding they're going to maybe hire someone or understand how it works, be an employee, but also break through out of that mindset of the traditional mindset about money and financial education and trading your time for money. Because I know you're big on Rich Dad's material too.
Mhm.
Are there teachings part of that? How do you incorporate, and what are some of those things that you do to shift those ways of thinking, so then that way the future generations are thinking differently about money and not just thinking from the employee mindset perspective? Not that there's anything wrong with being employee, but you see what I mean?
Mhm.
That makes sense.
Yeah, I see what you mean. At the same time, I mean, being part of Trust Your Talent, we're also trading our time. At
Right.
the same time, this is something we want to do.
Right.
And really is having the choice to do what you want to do.
Choice.
And I think just even throughout my journey, I think the kids see what we're doing. So they also see what other people are doing. Say, for example, I have the freedom. I actually have a lot of freedom. I still have my job at the same time. It's how you manage your time, how you choose your time. They see me teaching as well. By the way, I'm still in the 1,200 square foot home, right? It's an open concept. When I teach, when I talk to you,
Yeah.
they can hear it.
Right.
Yeah. So they understand the life we're living. So set an example. I think that's the easiest way. At the same time, they also feel the pressure because they're like, my friends are also working part time. So at the age of 17, my son is working now. And now he realized that it doesn't make sense. If I want to buy something, this is equivalent to 4 hours of work. And he realized, hey, we're going to Disneyland, we're going to Disney World, we're going on a long a long trip in Asia. They realized how much it might cost us. And we're building a fancy home. So they know that, however, we're by no means living a luxurious life, no fancy car, not like the Kardashians, not like that. That's how I put
Yeah,
it.
but you don't have phantom wealth. You have real financial freedom. You've been able to create that choice for yourself of what you want to do with your time because it aligns with your values, trust your talent, impacting other people, helping them. What are some key messages that you would give to the generation coming up that are being indoctrinated with the traditional view on money? And there's a lot of books and stuff out there, but what are some key messages you would give to that generation to help them understand to use money differently and use it as a way to build for themselves rather than just accepting something, getting into debt, and trading their time for money only?
Oh, that's a big question.
Big
First of
question.
all, it's okay to be in debt. That
Yes.
that I let him know,
Yes.
because that just reminds me of our conversation at lunch. Because my son said, "Can if I inherit one of your properties, could it be mortgage free so I don't have to pay for it?"
Right.
Then I like there's opportunities every day in life. I would love for them to sit in my class and just think, "Oh, that's the way it is." It's like going to school. They won't feel it. Like us going to, like I said, I read the book in 2000. I didn't feel it because at the time I actually got a good corporate job and I just started working and I didn't feel it. So I think we have to use every opportunity in life for them to realize or give them some clarity. So, for example, I mentioned mortgage. He said, why don't you give me a house mortgage free? Why do we have mortgages on all the properties? So I explained what's the inflation rate right now, what's the mortgage rate, why would you not borrow money for an interest rate much lower than inflation? It's things like that. He is 17 now. However, when he's 10, he wouldn't be able to understand that.
Awesome. So really like using good debt, like understanding good debt and not so good debt, not living a lifestyle that's not going to support being able to pay down or pay off those expensive with your assets.
Mhm.
And also understanding that the borrowing rate is still a lot less on a mortgage than inflation, a little bit less, right?
Yeah, exactly. That's how I mentioned it to him. I also just very, very basic private lending example. He knows that we have HELOC, for example. I will tell him with the equity, you can take out money at 6%. What if somebody give you 10% for that money? Would you want to make 4%? I mean, simple math.
Yep.
Yeah, that things like that he could understand.
Mm.
Good debt, but bad debt. We don't have to say fancy words. Just give them examples on why you do that. Credit card is basically debt because you don't pay for another 21 days, for example.
Right.
So he would say, why would you want to do that? I say, hey, do you see the hotels we stayed at? It's credit card points. And the three of us flew back to Taiwan. One of us was on point.
By the way, you gotta
So,
you gotta recommend some good point system because that's an awesome thing for business owners if they're listening. Like even ourselves, like points are huge. I know some people,
mm,
Spencer and Ashley, they do that stuff. They get lots of points, all these amazing flights paid for by the credit card points. That's a real thing,
yeah,
isn't it? Really
yeah,
works.
yeah, it definitely works. And same thing like real estate. Everybody would say it's so expensive to get in. It's so risky. I tell people about credit card deals. And a lot of people are saying you have to spend a lot to get the points and you have to pay annual fee. So as soon as you're approved, you get 25,000 points. That's one free trip in North America. Why wouldn't you pay the $99 annual fee?
That's
It's
incredible.
things like that. And same thing for real estate. The numbers look big. I get that's why a lot of people don't want to get in. At the same time, majority of the money is not yours. It's the banks. You leverage, etc. So that's why we mentioned the mindset is so important, right?
Shift. So you're almost showing them the power of what you can do with that money, getting a better return, and even how that translates to their dollar per hour in their job, right? Like,
Mhm.
you can make this much. Now you're using real estate and you're replacing that other active income that you have to earn the money for, I suppose, right?
Yeah, that's on the money aspect of things. I think we have more conversation. Like in my book, we go back to
Yeah.
your goals, what you want in life. So we have more conversation on, okay, actually, my son is in a band, for example. I said, if you really like music, if money is not an issue, would you want to do this? Then go for it. Because that's supposed to be the way it is. I mean, that's a huge mindset shift for myself because I'm Asian. We don't work that way. We don't normally function that way. Same thing. I said, if you want to get into basketball, do you love it that much? Then figure it out. If you want to get into basketball, he thought about going to the States for basketball, for example.
Right.
We look at the tuition and then we look for opportunity for scholarship. And then I asked him, okay, if that's really what you want to do, then you figure out a way. So instead of focusing on just financial education, I mean, the opportunity is there every day in life. Like we mentioned, credit cards, mortgage. At the same time, it's we say, okay, we want to provide a better life for our kids. At the same time, like I wouldn't say everybody, most of the parents I see are still work because we're now getting into application of university, for example.
Mm-hmm.
Most of the parents are still worried about, okay, if the school has a good program that's going to help them find a job, is this is still in demand, that kind of thing. Really, if we're at a point we want to build a better life for them, we're already at a point we don't have to worry about food, about survival.
Mm-hmm.
Then, like what Trust Your Talent is aiming to do. How do we provide a better life for the future generation? How do we create impact? How do we influence? So really, it's not about survival anymore. And it's funny, actually, my son said the same thing to me because my dad came from China with nothing. So they basically had to start from scratch. So he came on a boat, the only son, so the family gathered all the gold, all the money they could to send him to Taiwan. So for my dad, education is the only way. And you have to find scholarship. You have to basically start working at that age. So my son said, you know what? I realized that's not the case for us anymore. Yes, a traditional education is still there. However, everybody basically, if you have the resources, could get into a university or a college,
Absolutely. Absolutely.
post-secondary education.
Mhm.
He even told me it's a business. So don't worry too much
Yes.
about me not getting accepted because they
Yes.
want to have students.
They do. It's almost reminds me of Fake, Robert Kiyosaki's book, right? Like it's an asset, a vehicle for them to, continue to make money, really, and
Mm-hmm.
create debt and then create more, student loans, et cetera. So no, that makes a lot of sense. Almost like you said too, if they don't use it the right way and they're not getting the right knowledge, they're just using that debt. It's not great debt because it's not helping them get a better return for what they're using it. So with you're financially free right now. If you were to say, not a few things that helped you, but that journey in financial freedom, did you focus on, starting to replace your income? Like, how Tony Robbins has that sheet of saying, I'm
Mm-hmm.
replacing my housing and my food. This is level one.
Yes.
How did that shape out for you? And, just so you can help our audience understand if they're starting their first goal, maybe that goal is going to start with this or that, or, can you map that out a little bit for us just real quick if you can?
Of course. And everybody's journey is slightly different. I'll
Yeah.
give you the definition first of what's financial independence, what's
Yes.
financial freedom. So, financial freedom usually means that your passive income could cover your basic expenses.
Mhm.
So, some people cut expenses, some people aim to increase passive income. So, that's basically what you do. Same thing as when, as an investor, looking at NOI, how to increase revenue, reduce expenses. Same idea. That's how people aim to reach financial freedom. Financial independence is, for example, if you're working, if you have a 9 to 5, then you have enough income, either from flips, from selling, from all the passive income. The total income would replace your total income, for example, from working 9 to 5. And for most people, usually your income covers your expenses, right? So you aim to cover your basic expenses first.
So when someone's getting started, do you recommend like they look at portfolio, like maybe a little bit of rent to own, or maybe they look at a short-term rental, or does it depend on the student? What does that look like when it comes to mapping out a portfolio or something that's going to help them
Mm-hmm.
replace that income so they can, be financially independent as well?
Yeah, that's a very good question. You you probably when you ask that question, you think it's very basic. However, a lot of people wanting to get into real estate, they just have a feeling that I want to be free
Yeah, that's what,
and they don't know where to start.
right.
And I will go back to see what you're good at. Like personally, I didn't start from flip because even when we used to live in a condo, even replacing a light bulb, we will hire somebody.
Yeah,
We'll
same
call the maintenance office.
way. That's the same way.
Yeah. And not knowing much, we always get overcharged for the small renovation we did. So that scared me in the beginning. And then I realized, okay, if my goal, again, it's your goal and who you are.
Mhm.
So that wasn't what I was good at. At the same time, I'm looking at cash flow. So by the way, my income at the time, it wouldn't cover, even now, my working income wouldn't cover our family expenses
Right.
because my husband is also working. And I thought, okay, it doesn't cover it. However, if I can just replace it, at least I see there's progress in real estate. At least I see real estate works.
Right.
So I focus on just my replacing my income first. I know he's not going to quit. So let's focus on something I want to achieve first. So to replace that income, I looked at lease option
Lease option.
because yes, I'm not handy. Yes, I'm looking for very good cash flow to replace my working income. So that's where I started.
That's excellent. Now, without obviously getting into the weeds of all the details, can you just give me a brief idea of, basic idea of a lease option,
Mhm.
how it could help someone in being a real estate investor, as well as it helping them create some income passively, at least from real estate investing?
So lease option is a very creative strategy. And basically we call tenant buyer, they come in
Mhm.
and if you purchase stock, I don't actively invest in stock. However, I heard it from other investors. Now I realize money is just money, just tools and different vehicles. Lease option is the same thing. We call it option because they come in with what we call initial option to give them the right to buy the house they're living in right now. They're living in and renting right now. That's why it's called lease option, because they're still leasing with the option to purchase. So the money they put in initially and every month, that gives them the rights to purchase that property.
Okay.
Same thing as stock option. You sometimes have a stock option price at what price you purchase it at, or you put in $20 example, then you control so many stocks for a period of time, and then you can purchase it at a certain price on the maturity date. Same thing with lease option. So what's good about it is if you do, what is it called, cover calls, for example, you
Yep.
get the cash flow every month. And same thing with lease option. With lease option, whatever they put in as initial option or monthly option, once they're ready to purchase and decide to purchase, remember it's option, it's not obligation,
Right.
then they can convert what they saved up, convert to their down payment when they're ready to purchase. So the good thing is when they come in, there's initial, like I mentioned, initial option consideration. So that reduces your initial investment as an investor to go in the property.
So the investor buys for a tenant buyer. The tenant buyer in 3 years agrees to purchase it at a different agreed to upon amount.
Mm-hmm.
Whether they look at the market, they do an analysis, etc. And then the investor collects some sort of residual between the difference. Like they have the tenant buyer paying more than what the rent is or the mortgage is. Is that what I'm understanding right? So then they get the cash flow from that difference because for the 3 years, they have their money tied in for 3 years. There's a security because of the tenant buyer's profile. And they also get a bit of a cash flow because of the difference that the tenant buyer is paying towards that renting to own it. Am I understanding that correctly?
Yeah, in essence, yes. And at the same time, we're gonna credit it back to the tenant as their when they're ready to purchase to convert to down payment.
Okay.
So at least that they have that security. For investors, every time we as investors have some residual income, we will reinvest and create more money. And the cash flow comes from, so the total the tenant buyers pay monthly is a monthly option plus the rent. So if you purchase single family home, I'm
Mhm.
sorry, even a duplex or a 2 unit in
I can
Ontario,
give you an
it won't
example
cash.
like of a duplex here, like, you
Mhm.
know, well, okay. So yeah, go on, continue. I'm just thinking in my head about the duplex, but go on.
Yeah, in my cash flow, however, I mean, today in Ontario with the interest rate, it won't even cash flow. For lease option, if it's a single family home, you rent to a single family,
Okay.
it won't cash flow.
Right. It won't. Yeah,
Yeah.
agreed.
Yeah. So the option portion will help you with the cash flow every month.
So the option portion is like the allowing to boost it into a cash flow where the numbers normally wouldn't work. Because when
Mhm.
we sit down with clients, a lot of them, they're looking to replace their active income. And yet, if we do look at a duplex, it might be neutral, it might be there, but then it looks like rent to own could be a great option for them,
Mhm.
allowing them if they now how does someone get started in rent to own? They have to be approved to buy that property. They have to be pretty much as if they're purchasing that property. How does someone get started?
For myself, everybody is different if you don't have the qualification. So when I started, that's why I got into a lot of joint ventures. So initially, when I started rental, there is none of the rental that my husband and I qualified for because we were buying our home here.
Mhm.
So usually I'm the middle person, like a consultant. I find the tenant buyer or somebody like you or mortgage broker or other wholesalers. They refer the deals to me. In the
Mhm.
very beginning, I put up a Kijiji ad and then talked to 100 people in the beginning. And then I started to have referrals. And I usually find an investor and then I find the tenant buyer. So I'm more like the managing partner, managing the whole deal, putting it together. And how you structure it could be really creative. That's also how I started to see how lease option could work and joint venture could work, how working with other people can help you scale.
So ultimately, this can be a great option for someone to get a good cash flow to create financial freedom. Even a few rent to own deals can definitely add up, right? If
Yeah.
someone has questions, we'll make sure that you can book a call, and Brooke can even help you walk you through the rent to own opportunity.
Yeah,
Now,
for
the
sure.
person who's putting that rent to own together, are they kind of
Mhm.
a percentage model? How does that work when it comes to them making sure that it's a win for them too? Because you're managing the tenant buyer as well as the
Mhm.
investor. How does that work real
Mhm.
quick?
Usually the investor comes into lease option. They know same thing as me. We want to focus on cash flow. So I will work with them to see what cash flow makes sense for them.
Okay.
And then usually that's typically, for example, a lot of people focus on 50-50 joint venture, means half half.
Mhm.
We could do that at the same time if there's enough cash flow. Perhaps I can get 55, somebody could get 45. Or if there's not enough cash flow, I can get 40%, the other person could get 60% of the cash flow. So there's so many different ways. It depends on what we both are looking for.
Right. So yeah, it's all about the goals, like you said, the why behind the goals as well. So that's amazing, Brooke. So in the last couple minutes, I was just wondering as well, you talked about a methodology about scaling your retirement from 40 years to 4 years, I believe it was.
Yes,
Can you give me a couple key points behind that amazing presentation? Just dive in a little bit about that because I think that's really interesting for any of our listeners.
sure. Because I mentioned I started because we had RSP. It's not going anywhere at all. And I usually do, I have an example. If you,
Yeah, absolutely. Yeah, please share. Yeah.
Yeah, I'm giving you example. For example, if you focus on one flip deal, or you mentioned duplexes, if
Yeah.
you focus on one flip deal, and depending on which stage you're in life, a lot of people when they were younger, they don't have capital. So we were lucky because we accumulated equity from our home.
Mhm.
So if you're younger, it doesn't matter what you do. You can do flips. You can say, for example, you do one flip, even if I've wholesale deal in the past too. So I'll just give you one example because with the time frame we have, that's a
Yeah.
pretty easy way to understand.
Okay. Yeah, that'd be great.
If you wholesale a deal, you
Okay.
do wholesale deal for $15,000 and your income is 45,000.
Okay.
And even if you're working, if you do one deal a season, 15,000, and then that's 60,000, that replaces a lot of people's income already. So just see how quickly you can scale up. Like sometimes when I present different deals, I show how quick because the return on investment. So basically, when you go to a financial planner at the banks, they will
Mhm.
tell you, okay, 4%, 6%.
Yeah.
You can easily calculate how long that will take you to
Yeah. Yeah.
40 years. Pretty much is 40
Okay. So
years.
what you do is essentially you say, if you're doing a wholesale and you're doing a no money needed, you add $15,000. This is a strategy that you can make 15,000. You're making 50 grand a year. If you do this for the next 40 years, we're cutting into it this percent, and you're going to reduce your retirement, the time you need to work to retire, therefore compressing that. Am I understanding that?
Yeah. And I really focus on what people are looking for. So people sometimes can relate to me because they're saying, hey, we're also looking to pay off our mortgage, or we're also looking into buying a new home.
Right.
So I'm giving them example like if you focus on lease option, cash flow, just rough example, is $1,000 per unit,
Right.
and your mortgage is 3,000 a month.
Mhm.
Just find three deals. Just find three deals. That's all you need.
So you're saying
Um,
that someone could be between 500 and $1,000 cash flow on a rent to own option? Like those
if
are definitely more.
Yeah, the example I gave in my book, that's roughly a 400 to 500,000 home. I know that's a little difficult in Ontario for starter home now, based on the interest
Possible
rate
though. It's still
at the
possible. Yeah.
time.
Okay.
Yeah, yeah.
And so if the market's changed a little bit, where like let's say prices gone up a little bit or the rates gone up a little bit, how
Mhm.
does that affect like the rent to own? Is it still a great option or strategy right now for an investor to add cash flow?
For cash flow, yes, it still works. So the example I gave you, even if it's $1,000 split between the joint venture,
Mhm.
you still have $500 of cash flow.
Mhm.
Let's be more conservative that way. Or even if it's during the time when the interest rate is higher, for example, that's reduce it to $400. And if you have two deals, three deals, how often do you get $1,000 raise per month working?
Mm. Okay. That's awesome. We'll have to have you on to like go through our actual rent to own if people are interested in it. But where can people find you, Brooke, and anything else that you'd like to add? It's been amazing, like connecting with you and like understanding your story. It's been really inspiring for a lot of people and myself too.
Thank you, Sam. We always have great conversation.
Indeed.
My name is pretty unique for Chinese. So if you look for Brooke Shang in LinkedIn, Instagram, Facebook, it's all just me. It's
Okay.
all just me. Yeah, you don't need one, two, three, or underscore. And of course, on Trust Your Talent website too.
Good. And any events that you have coming up that you'd like to share about Trust Your Talent so that way people can find it if they would like to take another step in empowering their
Mhm.
market journey?
Yeah, we constantly have events almost every week, almost every other week.
Okay.
However, I do encourage people to start talking to one of us because, like I mentioned, in even the example we went through, everybody is so different. So come join us for sure. At the same time, start talking to one of us. So you kind of have an idea what strategy would suit you or will help you reach your goals. So that's usually the starting point because I think even though the basic idea is the same, foundation is the same, it's good to have a plan mapped out.
That's awesome. Well, Brooke, this has been I've learned a ton. So thanks so much for being on.
No
We'll make
problem.
sure that we have your site on there for people to reach out to you. And again, Brooke, thanks again. We really appreciate your time.
Thank you, Sam. It
Have an
was
awesome
great.
day.